So I'm not going to flirt with you, but I will do my best to try and present what's happening with the Israeli venture capital community. She took the, okay, sorry. So 2 words about Vintage. I started Vintage in 2003. We today manage about $1 billion investing in secondary funds, or we have our own secondary funds. We're a fund of funds, and we also do late stage investing, for the most part in Israel, although we invest in Europe and the United States as well. We track today about 5,000 companies, 4,200 in Israel, and through our database of investments in Europe and the US, about another 800. One of those things that has allowed us to work with a lot of strategic partners around the world, helping them map technologies that they would be looking for. And we provide that as a free service in order to help the funds in which we've invested and the companies in which we've invested. And as a result of that, just in the last 6 months, we've done mapping for 94 Fortune 5,000 companies, introduced them to 474 companies, 183 meetings, and I'm happy to do that for anyone here who would like to learn more about or meet Israeli technology companies that could be helpful to them. And here are some of the names of some of the groups we've worked with. So let's talk about the Israeli venture community. A lot of people are talking about a bubble. I have no idea if we're in a bubble or yes, no, don't know. But I know one thing I know is you got to look at the fundamentals, and if you invest for the long term, you can make some very, very good money. So let's talk about the industry. Now you're going to see a few slides that every single person presents, which is the multinational slide, so I'll save you that one. But there are a few things I want to talk about. What's happened to the industry as a whole? Is this a good time to invest, looking at the fundamentals? And there are 3 aspects I want to talk about. So let's talk about the Israeli venture industry as a whole. It started pretty well in 1992, 1995. That's when I ended up getting into the industry. There were 17 funds managing roughly $500 million. The industry was largely created by a government program called Yozma, which helped facilitate the formation of 10 of those funds. Those funds subsequently raised additional funds. That created what we call Wave 2. Then we had a balloon of Wave 3, 85 funds raised $6.5 billion. Then, of course, the crash happened in 2000, and we saw a gradual consolidation. And today, the steady state of the Israeli venture industry is 30 plus minus funds, raising about $3 billion per cycle. Now, remember this wave structure, because I'm going to talk about what happened to company formation during those same periods. The current pace of fundraising by funds today is about $800, $900 million a year. We expect it's going to be about $850 this year. And company formation, interesting enough, if you recall, before I showed you that there was a decline in the number of dedicated dollars to the Israeli venture community, well, that happened at the same time as new company formation more than doubled. So at the time of the last bubble, there were about 690 companies created a year. Our projection this year is we'll hit about 1,400. Now, most of that company formation comes in few areas. One is, of course, communications, and that includes web apps. Internet companies, some B2C, some B2B2C, and enterprise software, where we have seen relatively little formation, unfortunately. And I say this unfortunately because Israel has strength in this area, is in the semiconductor space. We've seen a decline in the number of clean tech companies being formed, and we've seen a relatively steady state in the medical space. Now, if you took the number of companies created each wave, and you took the dedicated dollars to invest in that period, this is the best period to invest in Israel's history. Now, people have realized that. We're not the only ones. And that's why our projection this year is we'll see about $4.6 billion invested in Israeli companies. Well, how does that jive if the industry has gotten smaller? Well, the reason that's happened is because, as I say, people around the world have realized this is a buyer's market. So many of the top tier US VCs have become very active in Israel, as well as many corporates. And of course, Square Peg from here. So we've reached even to the point where 85%, John Medved mentioned this morning, 85% of the money that's being invested into Israeli startups isn't even being invested by Israeli funds. It's being invested by non-Israeli investors. But what's interesting is, it's not that the Israeli funds have disappeared. In fact, they're deploying more than they did 4 years ago. This year, we will see about $600 million deployed by Israeli dedicated funds. The reason their pool has declined, or their percentage has declined, is because the pool has grown, because the number of companies is so much larger, and because the areas that Israeli companies are being formed in are such hot areas, that has attracted direct foreign investment. So what has happened to the Israeli VC community? Well, what we've gradually seen is a movement upward of the Israeli VC community, from later stage more to earlier stage. And you see this in the next couple of slides. So not surprisingly, seed investment still comes from angels and crowdfunding groups, but the largest investor in A-round investing are Israeli funds. So they may only be 14 or 15% of the whole pie, but they're almost 50% of almost all the A-round investing. And so that's what has happened. You've seen this interesting shift of almost a dichotomy between the foreign investors investing in later rounds and the Israeli funds investing in earlier rounds. Now, this industry is an industry of gigantic wins. The mistake that some people look at is say, I'm going to invest for a 3x as an early stage investor. That's a mistake, because you're going to lose a lot of investment. So the only way you can generate a big return is you have 1 or 2 or 3 fund returners in your portfolio. And what is true as a principle in the United States is also true in Israel. So when we looked at all the returns from all the funds in Wave 3, which was the funds from 1999 to 2004, 10% of the companies yielded 74% of the returns, which raises an interesting question. So how do you make sure that you get into those, and how do you manage your portfolio to generate, the great returns? So let's look at 3 aspects. One is, what are entry prices like in Israel? Number 1. Number 2, are we building real businesses? Because to generate the 74% of your returns from 10% of your investments, you have to generate real businesses. And finally, are we exiting those companies well? So let's look at entry prices. So we looked at every single round, and again, this is data from 4,200 companies. We looked at every single round, A round, B round, C round, D round. We have positions in 100 venture funds in Israel. What you see, interestingly enough, despite what's happened in the public markets, A round prices in Israel have remained relatively flat. B round investment prices have remained relatively flat. What we've seen has been, not surprisingly, an increase in the prices of C rounds and D rounds, in other words, the later rounds. Partly, as you will see in a minute, that has come from the amount of money coming from foreign investors who want to invest in late stage rounds in Israel. And in fact, you see that here. The pink is the portion of the dollars invested each year that is late stage. And you see it even more starkly here. The amount of late stage money between 2013 and 2014 increased 2.5 times. And we project that relative to 2013, it will be 3.5 times the size as it was then in this year. So in other words, all this money coming in has not surprisingly pushed up prices for later stage rounds. Now, putting all that aside, and we're active investors in US venture funds and European venture funds, prices in Israel are way cheaper than they are in the Valley. But on relative terms, it certainly has gone up. Now, you don't see that with the A rounds, and because you're seeing a lot more companies and you're seeing a lot less money, largely coming from Israeli investors, which have remained a relatively small part of the portion of the industry, investing in the A rounds, and so prices have remained relatively flat. So are we scaling businesses? What's nice about this, in order to generate that 74% of your returns from 10% of investments, you need some investments that are going to return to you as an investor $100 million. And for the first time in a long time, we're starting to see Israeli funds generating returns that are at least $100 million to their fund. And some other groups, and you can see the ones in yellow, have those registered on their books at $100 million valuations and above. And the reason for that is because people are not selling companies early. They're starting to grow them. Now, this isn't a big enough number, but we're starting to see more and more companies with $100 million in revenues and above before they're sold, and certainly before they go IPO, so they'll have more visibility when they do go public. And similarly, we're also seeing those companies starting to make acquisitions, because you don't have an absolute total capability internally to develop everything you need to develop. So you have to sometimes make acquisitions in order to build out your product pipeline. And Israeli private companies are starting to do that, and we see that as a very positive development. Now, are we exiting them well? So far, what we've seen in VC-backed exits, we're almost where we were in 2013, which was the year that Waze was sold. Based on transactions that we know that are happening now, we believe this year will surpass 2013, and so we should cross, hopefully, the $5 billion year for VC-backed exits. And what's interesting, it's not the total amount only. In each of the last 3 years, we've seen at least 8 acquisitions above $300 million, and we think that's a positive trend. People are holding out for much more substantial exits. And if you look at where those exits are coming in, and I'm putting aside, this is, again, the M&A discussion, enterprise software is what's been attracting people to Israel. It's attracting many of you in the audience. And that includes, of course, cybersecurity and cloud infrastructure, et cetera. Other areas that are strong are semiconductors. And you remember that small little line, unfortunately, of new company formation in the semi space? Well, those very few companies have generated very substantial returns to their investors in the last 4 years. In fact, in Israel, an investor who invested in a semiconductor company, if you were a monkey throwing a dart on the wall, you got a 3x on any exit. And that doesn't include Mobileye. And of course, life sciences, which has generated also some returns. And you see this slide, so I'm just going to skip it. But I'll tell you, here's an interesting stat. Not only are people opening up R&D centers in Israel, a driver is the amount of cash that's sitting on their balance sheets outside the United States. And what do I mean by that? If you're Oracle and you're sitting on cash outside the US and you want to repatriate it to the US, you pay tax on that. So you can either leave that money in the bank or you can use it. So if you have a company in Israel, or you have a company, for that matter, in other places, it could be Australia as well, that's equal in Israel to equal to what you have in the US, you're much better off making the acquisition outside the US because you can use that cash and not have to pay 36% tax. And just to give you a sense, almost 90% of Apple's cash is trapped outside the US, a big driver for making acquisitions. Not surprisingly, we're seeing multiple acquisitions of many of those same groups. And we continue to anticipate that they will make acquisitions in the many years to come. Finally, what we're seeing also is a substantial increase in the number of IPOs of Israeli companies. Unfortunately, and this is a criticism on Israel, we don't have a very strong domestic capital market. If you want to do an IPO of a tech company, you really do it on NASDAQ, and what we've seen is a nice wave of IPOs, certainly in 2014. We believe that there will be 6 or 7 IPOs of Israeli companies on NASDAQ in 2016 if the markets hold, and that trend should continue. So bottom line, prognosis looks pretty good. The fact that new company formation is an all-time high is great news. The fact that foreign investors, especially some of the top-tier U.S. investors have come into the market is actually good for the market because they raise the bar for exits. People are holding out to bigger exits. And again, building these companies properly and building them to an IPO in the U.S. will even generate better returns. Thank you very much.
Thank you, Alan. We're going to continue with this rapid change of phases and controls you're getting used to. I don't mean just used to here, I mean used to with the Australian government. And with that, I'm going to invite to the stage Paul. Oh, there he is, Paul. Paul, please come up. We all know Paul Bassett created, rode and tamed one of Australia's 6 unicorns before becoming the principal and founder of SquarePeg.